Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top highlight events for the week. We have quite a number of things going on, ranging from the US big tech earnings. We'll also be looking at the Bank of Japan interest rate decision. We'll be getting an update on US versus China in the trade war and the progress so far. And of course, we also talk about the non-farm payrolls that are coming up this Friday. So once we cover this, we also do some technical analysis to try and understand what's the current market structure. And once we cover this, hopefully everyone will trade profitably from an informed perspective. So good morning, Paul Carey, and shout out to you for being the person to join and comment. Good morning, Dennis Pwangi. I can see Rono in the house, Maureen, Tom Isaac, Anduko, and Joshua. So thanks, guys, for joining. So let's get started with the economic calendar. So from what we see today, the main event will be the federal election in Canada. So this is happening all day, and we'll be following closely to see who wins. And of course, whenever there is a smooth transition in power, most likely we could be seeing the Canadian dollar strengthening. So outside of this, we have quite a number of things coming up over the week. So one of them will be the CPI from Spain. This will be tomorrow at around 10 a.m. Then we'll get the Case-Shiller Composite Housing Price Index in the US at 4 p.m. Before we focus on the JOLTS job openings in the US at 5 p.m. So also, we'll be looking at the CPI in Australia. This is a measure of inflation in Australia, where we're expecting a slight slowdown to 2.3%, down from 2.4% in the previous reading. We'll also be getting manufacturing and non-manufacturing PMIs from China at 4:30 a.m. on Wednesday. And then we get German as well as a French CPI. Then later on, we focus on the ADP non-farm employment change at 3:15 p.m. on Wednesday. So for the US side, we'll be getting the advanced GDP quarter-over-quarter data, where we're expecting a big slowdown from 2.4% down to 0.4%, most likely because of the impact of the current tariffs. Then we'll look at the core PCE price index, which is the Fed's favorite measure of inflation. So in this case, we're expecting a slowdown to 0.1%, down from 0.4% in the prior reading. So we'll also be getting the weekly crude oil inventories at 5:30 p.m. on Wednesday. Before now, we focus on the Bank of Japan. So the Bank of Japan has been planning on hiking rates at least twice this year. However, for the May meeting, we don't expect much of a change. So in this case, we'll be expecting the Bank of Japan to hold interest rate steady at 0.5%. So later on, we'll get the Bank of Japan press conference. And of course, on Thursday, we'll be having a major holiday. So a lot of banks will be closed on Thursday, ranging from Switzerland, the Eurozone. We'll be getting all these holidays on the 1st of May. This is when a host of countries will be celebrating Labor Day. So you'll get the unemployment claims on Thursday at 3:30 p.m. We also get the ISM manufacturing PMI in the US at 5 p.m. And of course, for the main event of the week, it will be the non-farm payrolls, which will be coming up on Friday at around 3:30 p.m. So outside of this, we have other new developments happening in the markets. So on one side, the Bank of Japan is expected to keep rates steady on Thursday, and one of heightening risks to the fragile economy that could keep policy in a holding pattern as US tariffs continue to hit confidence. So in this case, we will still be pretty positive on the Japanese yen. So from the press conference after the decision, we'll be focusing on whether there is a hint of further rate hikes further down the year. And if we get that, then most likely we could be seeing the Japanese yen strengthening this week. So among the key highlights this morning, Asian markets remained subdued in early trading. European markets have been trending higher since open, so it has been a pretty good start to the week. Finnish consumer morale improves in April. Singapore Q1 jobless rate highest in a year. China confident in 2025 growth target, promises new policies for Q2. Gold drops as US-China trade tensions ease. And of course, China industrial profits rebound in Q1, and these are the key highlights this morning. So outside of that, we also know that we are expecting the Fed to be meeting in the next 9 days. And the probabilities are increasingly likely that the Fed will be holding rates on the next meeting. So in this case, with a 91.1% probability that the Fed will hold rates at the current level. So on the currencies performance this morning, we've had a pretty strong dollar. So the weakest currency since the week opened is the Swiss franc, which has lost 0.46% to the dollar. The New Zealand dollar has also lost 0.39%, the Australian dollar 0.35%, and of course the Canadian dollar 0.26%, the euro 0.12%, with the UK pound being the strongest currency as of the start of this week, or basically this morning. So the pound remains the strongest currency this morning. So on the earnings side, we have quite a number of companies that will be reporting earnings this week. So we are basically talking of 20% of the SP 500 stocks. So among the key highlights will be the following. So we'll be having 180 SP 500 companies reporting earnings. So key focus will be on big tech, with Apple reporting this week. We'll also be having Amazon, Meta or Facebook. We'll also be getting earnings from Microsoft. Of course, we'll also be getting Coca-Cola, Eli Lilly, as well as Chevron. So those earnings will be key determiners of the movements, especially in the top US equity indices. So if you are a Nasdaq trader, SP 500, Dow Jones, you should be expecting to see major moves this week with these companies reporting their earnings. So outside of that, trying to look at the next update to prepare for this week. So yes, Trump is still having these presentations where he's still moving to and fro, back and forth. So we know that over the weekend he had said that they are meeting with China and negotiating, and then China came out publicly and said that Trump has not been in communication with China, and they have not had any form of negotiations. So among the key highlights this morning is that there will be no deal between China and the US, and this is from a strategist. So market optimism is fading as trade talks between China and the US stall. Simplify asset management chief strategist and portfolio manager Michael Green, and Mark Rowlands, managing capital and chief strategist Brian McCarthy, joined Qataris to explain what's driving the standoff. So in this case, we are looking at a case where China doesn't want its economy to be impacted by tariffs, so it has said that it will be protecting jobs within China. But then their non-negotiables is for Trump to remove all tariffs, but Trump is still holding on strong that he will continue holding on to tariffs until China yields. And of course, this is impacting a lot of things. So we could be seeing major supply chains impacted in the next few weeks, and potentially the US could be facing some shortages in some goods and services, mainly because of the tariffs it has implemented on China. So on the other side, Trump has floated a new income tax cut in a bid to ease the tariffs bite. So Trump suggested Sunday that his sweeping tariffs would help him reduce income taxes for people making less than $20,000 a year as public anxiety rises over his economic agenda. So Trump has previously argued that tariff revenue could replace income taxes, though economists have questioned those claims. So when tariffs cut in, many people's income taxes will be substantially reduced, maybe even completely eliminated. Focus will be on people making less than $20,000 a year, he said on Sunday on his Truth Social network. So among other updates, April jobs report, big tech earnings will be on focus amid stock market recovery. What to know this week? So clearly, you can see the impact of tariffs since April 2. So we had the US major stock market indices are collapsing or going all the way down by up to 15%. I'm talking about the NASDAQ, the SP 500, and the Dow Jones. However, since the bottom that we saw on the first few days, and here I'm talking about the 7th of April, we have seen the stock market mainly coming back to pre-April 2 price levels, with the Nasdaq being the front runner, basically recovering almost 100% from the losses it had made when the tariffs were announced. So, of course, the earnings will be pretty important this week in determining the path to recovery for the top 3 indices. In this case, I'm talking about SP 500, the Nasdaq, as well as the Dow Jones. So pivoting press, stocks soared last week as President Trump backed down on 2 key points for markets. So on Tuesday night, Trump told reporters that he has no intention of firing the Fed Reserve Jerome Powell, reversing a recent market narrative that had contributed to a nearly 1,000-point loss in the Dow Jones Industrial Average on Monday. In the same meeting with the press, Trump hinted at a de-escalation in a trade war with China, telling reporters that 145% tariffs on the country will come down substantially. So we have seen some decent progress in the stock market in absence of really any sort of negotiation. And this is from Fundstrat, Mark Newton. Just knowing there's a pivot in price that the administration is willing to pull back, I think is a positive. Of course, if Trump was to eliminate all these tariffs, especially on China, then we would see the market making an impressive recovery. And we have already begun seeing it with stocks such as Tesla, which made some pretty double-digit gains last week. So on the Chinese side, the update is that China shrugs off threat of US tariffs to economy, says it has tools to protect jobs. So China's leaders are downplaying the potential impact from US President Donald Trump trade war, saying that they have the capacity to protect jobs and limit damage from higher tariffs on Chinese goods. The briefing Monday by several senior officials of different government ministries appeared aimed at shoring up confidence with promises of support for companies and the unemployed, easier lending conditions, and other policies to counter the impact of combined tariffs of up to 145% on US imports from China. So it followed a meeting of China's powerful Politburo last week that analysts said had focused on ways to keep growth on track despite slowing efforts. Chinese policymakers on the heightened standby mode, Lois Lu, lead economist at Oxford Economics, said in a report. She noted that the policies were similar to earlier pronouncements. So uncertainty persists over the status of exchanges, if any, between the White House and Chinese leader Xi Jinping. So, of course, we'll be following on the story closely over the week, trying to understand the key developments. And, of course, any potential deal between the two countries would most likely be positive for equities. So, of course, there's been quite a good number of developments. So, on one side, Trump tariffs live updates. China eases some US tariffs as Trump says he wants concessions. So, US and China tariff tensions continue to dominate the focus, with signs of de-escalation mounting even as President Trump sent mixed signals on the state of relations. So, on Friday, reports emerged that China quietly rolled back tariffs on some US semiconductors, easing pressure on its tech sector, along with certain US pharmaceuticals. Bloomberg reported that Beijing is also weighing tariff relief on medical gear as well as chemicals. So the developments came as China has struck a publicly defiant tone, and Trump sowed confusion by claiming that he had spoken with Chinese President Xi Jinping, which Beijing, of course, denied. So China and US are not having any consultation or negotiation on tariffs. The US should stop creating confusion, the Chinese embassy in Washington wrote on social media over the weekend. So I believe those are the key major highlights as of this morning. And now with that, we can jump straight to some technical analysis, try to understand the current market structure. And once we cover this, hopefully everyone will trade from an informed perspective. So of course, if you have any questions related to the presentation, feel free to type them in the comment section, and I'll be responding to those questions toward the end of the presentation. So from the market's perspective, I would like to begin with the dollar index. Of course, as you can see, we have had more of a sideways momentum since Thursday last week. So notice how the markets were moving sideways also on Friday. So we can literally say that the dollar is currently in some form of consolidation, and this can be seen across board. Of course, this basically means we should be expecting to see some nice breakouts later in the week. So Monday is often a quiet day. We don't have a lot happening on the markets. So this means that the moves that we're experiencing are likely to be slow sideways momentum. So with that in mind, if you look at gold and its performance since last week, we can say that we have had bearish trend line on the highs. And this is from Wednesday, Thursday, Friday last week, and of course today being Monday. And if you look at the lows, they have also been slightly moving higher, which means that generally gold is simply moving a bit more sideways. And with this kind of sideways momentum, of course, it's more tilted to the downside when you consider that we are just coming off a new all-time high of 3,500. So more like the market has shifted from a big impulse move to more of a consolidation. And of course, later on in the week, we should be expecting to see some breakouts. So a key level to watch on gold will be the support area around $3,245 per ounce of gold. So in this case, potentially breaching the low that we saw this morning, the low of Friday, as well as Wednesday last week. So right now, gold seems to be trading sideways, but at some point over the week, we should be expecting to see gold retesting these lows here and potentially breaking lower as we see investors getting back into equities and equities recovering from the tariff scare that we saw a few weeks ago. So oil made an inverted head and shoulder pattern, rallied to our first target of around $67.832 per barrel. So our second target was around 68.994. But then from what we can see from last week, we had this kind of a double top formation, meaning that the bullish momentum was not sustained, which now likely leads us to now observing the current range. So the range we have here is basically looking at Friday's high, this morning's high, Friday's low, as well as Wednesday's low. And in this case, we can easily say that oil has been moving sideways for the last 2 days. And now we are entering into that day where oil is just moving sideways. Of course, we'll be observing, waiting closely to see when a breakout happens. And then if the breakout happens to the lower side, then we should be looking for shorts. And of course, the opposite is true. If we happen to see a breakout on the upper side, then we should be looking for buys. So US equity indices, we had the indices forming gaps on Wednesday last week. And then we expected the market to close the gap. This played out nicely. We saw the market coming back here. Didn't quite close the gap fully. And then it went back up to the high that we had seen on Wednesday. So now as we start a new week, then the limitations are somewhere around last week's high. So we should be looking at the market retesting that. And of course, from the daily time frame, you can see that this is a recovering market. So after the big scare that we saw with the tariffs, the market dropping all the way down, in this case, almost 20% for the Dow Jones. We have seen the market being pretty resilient, and in the last 2 weeks, attempt to move higher. Of course, we have our limit at 40,847 price action level. Of course, we should be expecting to see the market retesting last week's high. So we'll be observing closely. As for now, it's more of a sideways momentum, but at some point, we should be expecting volumes to come back in the market. So of course, we also expected the Nasdaq to close the gap. Didn't close the gap as much, but then continued to rally higher, showing the current strong bullish momentum happening in US equities. Of course, after the big tariff scare, we have seen the market recovering more than 50%. So from the 1 hour time frame, you'll notice that we are currently just above last week's highs. So in this case, notice how we managed to break above this area on Friday, pullback and a continuation, which likely means that the market is headed higher. Of course, for the next target, we should be looking at price action levels somewhere around 19,630. So SP 500 also didn't manage to close the gap fully and continued to move higher. So in this case, we're looking at a potential bullish momentum, and with the 4-hour chart, you can still see that there's still more room for upside, with now the next target being all the way up to 5,681 price action level. So with the Bitcoin, we had more of a sideways momentum. So after the pullback here, notice from April 20, Bitcoin was majorly on a downward spiral, moving down by 32%. But now it has made an impressive recovery since last week. And now being 32% down, it's now just 13% down from its most recent high. So in this case, what we are seeing is a clear bullish momentum. Of course, we identified this area as a potential entry point. Of course, our target remains the same, 99,426 as the next leap. So from the 1-hour time frame, you'll notice that we were in some form of triangle, more of a consolidation here, but now it seems like the market is ripping higher. So on the currency side, we have the euro dollar being more in a consolidation, more in a sideways momentum. Of course, we'll be observing here to see any signs of a form of breakout, but so far it's more of a sideways momentum, which basically means that we will likely be seeing some nice breakout later in the week. So for pound USD, it's the same thing. It's more of a consolidating market, more of a sideways momentum. Of course, we'll be observing for a break. For Australian dollar, it's more of a range. So this is one market trading in a sideways momentum in a range. Of course, we haven't had a breakout yet, but I believe we should be getting a breakout later in the week. So for the dollar yen, what we are seeing is a very strong bounce from this price action area. So notice how the market has bounced from this area several times. Of course, the yen was getting super strong against the dollar, but now the dollar is coming back from these lows. So the last time we saw this happening, notice that this was last year's low. And of course, in the last quarter of the previous year, this was still the bottom. So we have seen the dollar bounce from around 139.8 against the yen. And so far, it seems to be making some good progress higher. So last week seemed pretty bullish to me. And of course, this area is what we should be looking at as a potential resistance area. And of course, if the market was to break above this, then that would likely mean a bullish position. But then since that hasn't happened yet, and we are looking at the Bank of Japan interest rate decision later this week, more likely we should be seeing the yen strengthening and perhaps even retesting the previous low. So we'll be watching this closely as we get more developments on the BOJ rate decision later in the week. So as for the Nikkei 225 index, we had this kind of consolidation that lasted 3 weeks, but then we had a breach or a break towards the upper side, and the market rallied to our target. This was 36,028 yen per share. And now after hitting that resistance, you'll notice that the market is now pulling back. So we should be waiting for some form of pullback before we bank on any continuation of the bullish momentum. So on the New Zealand USD, as you can see, so this is one chart we've been following closely. Of course, we expected the market to retest these areas here. So we have a clean break towards the lower side, meaning that the market is now reaching out to form lower lows. Of course, you can see the highs have been getting lower since last week. Of course, we should be expecting to see more of a change in the momentum in this market, with a clean breakout expected around this area here, which would signify a change in the direction of the market from bullish now to bearish. So as for silver, it's also attempting to make some form of recovery this morning after the big sell-off in the Sydney and Tokyo sessions. So what we are seeing with silver is more of an attempt to move back higher. So if I was to remove everything from this chart, and then you look at the price action as per last week, silver really struggled to break above this area here. But then upon dropping, notice that there is clear levels around this area here that would have served as a potential support. So the market ripped through this area here and is now attempting to move further back downwards. So in this case, having seen the double top here, the market failing to form a higher high, then most likely you should be seeing the market retesting the 32.067 price action level before any further continuation. So for European equity indices, we have had quite a good performance this morning. So beginning with the French 40 or the France 40 or the CAC 40 stock market index. So notice how the market opened with a gap. It has crossed the gap, pulled back, and is now looking to make a continuation. So as the market continue recovering, good chances that it will be easier to capture a lot more bullish positions from these European indices. So the French 40 seems to be making some impressive comeback. And of course, with the strongest one being the Spanish 35 IBEX. So clearly from last week, we expected a completion of this pullback. Of course, we crossed this gap here. And the market got to a target of 13,361. And now we should be expecting to see a continuation of the same, with the next test being the previous high. And of course, the index is very close to getting into a new all-time high. So most likely we should be seeing the market pushing higher and getting to a previous high around 13,509. So as for the Germany stock market index, also the continuation is progressing well. In this case, a recovery from the earlier sell-off. If you note from the previous high, the market had really gone down by about 20%. Of course, it has recovered most of the losses within a few weeks. So in this case, our target was 22,431. The market hasn't hit there yet, but good chances that we will be seeing more recovery this week. So the EU 50, we had a target around 5,213. So for the Euro stocks, after breaching this resistance, we have seen the market continue to trend higher, though a bit slow, but still the direction is still the same and the target is still the same, 5,213, with a potential for an extension even higher. Of course, if we get to that target, then the next target will be 5,306. So as for USDCAD, which is the last currency I'll be covering today, in this case, we are looking at a market that is literally moving sideways. Of course, we can see the range just shifted from this now to this. So yes, there was an uptick, but since we got there, the market has been facing a resistance around this area here. And of course, the support is around this area here. So the market is just moving up and down. And of course, with this kind of cycle, we expect that the market will hit a resistance around 5 days high, then turn back towards the lower side unless something changes. And of course, knowing that today there is the election in Canada, we could be seeing the Canadian dollar beginning to reclaim its strength against the dollar. So that's it for the day. I'll be checking on questions. If there's any questions, I'll address it, and then we end the session there. Kindly give me the procedure for joining the free beginner class. So we have physical classes only in Kampala and Dar es Salaam. But then for the online classes, all you have to do is to visit any of our social media pages. If you use Instagram or if you use Twitter, you'll find a link in bio. So that link should help you register for a Zoom class with us. A good question here. How far on the left do you consider a price level important to the positions you intend to open? Also, how important are fair value gaps and order blocks to your trading activity? So it really depends on the current market pattern or current market structure. So when you're looking like how far back you can go, it really depends on the current structure that you're looking at. So key endpoint, if you look at, for instance, oil, and then you zoom out all the way, you'll notice how that this area is significantly different in that it has been serving as a key level support. So this, if you try to go back and look for a support, The last time that price was trading around these areas here was all the way back in 2021. So of course, it's a significant support area. But then if you're looking for an intraday trade, then you don't need to go all the way back. In this case, we just consider the limits of last week. That's last week's high, last week's low. Of course, that has an imprint on the liquidity in the market. So in some cases, we go all the way back, and in some other cases, we just consider the most recent momentum. And of course, I'm talking about last week's high and last week's low. So for instance, if you're trading gold today, most likely you should be concerned with last week's low. Of course, the market could potentially breach that area here. Of course, the prior week had this area being pretty important. Of course, 32.45 could be the next target if the market breaches lower. So good question here. Bought BTC at breakout area near 83K, wondering where I can trail my stop loss. As a swing trader, noting reversal is possible also. So from what we are looking at, especially in BTC, it seems to be making good progress in correlation with the SP 500 as well as the Nasdaq. So of course, it seems like the market is headed to our next target, which is 99,426. Then from the H1 time frame, you'll notice that this morning BTC has just broken that resistance or that particular trend line. And of course, that being the case, then it means if you're looking to trail, then you should be working around last week's low. So last week's low, not all the way back to Monday, it's more like this, a small swing here. So after we got this strong rally, the market pulled back to this area here before making progress higher. So if you are looking at trading, most likely should be somewhere beneath 91,456. So most likely you should be seeing more upside for the week. So are there any charges on the Zoom classes? No, we do not charge any of our classes. FXPesa basically sponsors the whole education to make sure that we have strong clients who trade from an informed perspective. Good question. Can we find live chat recording later? Some of us are at work now. Yes, all these sessions are recorded. You can still access it live on YouTube. If you're using Twitter, you'll still be able to access the recording. It's right there on demand. So I believe that was the last question. Thank you very much, guys, and I hope to see you on the next session.